Thank you very much. Good morning. Everybody knows we're talking about taxes, right? Everybody know that? So there's lots of coffee. My goal is for nobody to fall asleep, fall off their chair, and get hurt. I told Jeannie that, that I have a 5-hour tax presentation. Yay. And so she said I have 20 minutes. So we'll see. I want to talk about 1, 2, and 3. Okay, I'm going to talk about one thing that is the most important thing we're dealing with in Washington, D.C. right now as it relates to small business, and there's going to be homework. Okay, so I need you guys' help, so make sure you have a pencil and piece of paper because there will be homework. Then I'm going to talk about the 2 questions you are likely to get when the IRS comes calling. Okay, anybody finished their tax return yet for this year? Everybody? Nobody's done their tax return yet? Okay, when it's time to do your tax return, I want you to think about these 2 questions. Okay, because in the year that you get audited, these are the 2 questions you're going to get. Then last, I'm going to give you 3 tax-saving tips. Okay, things that you may have thought of, may not have thought of, may apply to you, may not apply to you, but these are 3 things you got to think about before you finish your tax return. Okay, so score me on 1, 2, and 3. First, number 1 thing we're working on with the National Association for the Self-Employed in D.C. is tax reform. Anybody read the papers? Know we got a new president? Okay, we won't debate the president, but one of the things that is high on his agenda after Walls and after Obamacare is tax reform. Okay, tax reform will happen this year. Okay, this is extremely important. What Trump is trying to get through is simplifying the tax code to have fewer tax brackets. Right now, as an individual, you pay tax, some of the money you pay tax at 10%, some at 15, some at 25, some at 28, some at 33, and if you're lucky, some at 39. Okay, if you're lucky. Most of us don't have to pay that part, but a bunch of different tax rates. Corporate rates basically at 35%. Okay, what Trump wants to do is take the corporate rate down to about 15, flat across the board. Then individual rates, only 3, 33, 25, and 15. Does that sound simple? Does that sound easier, better, nice? Now, I hate to use IRS and logic in the same sentence, but the logic of taking the corporate rates down to 15% is to encourage investment in business, right? So business owners should get to keep more of their money because then they hire more people, they invest in the business. Very Republican-leaning concept, but kind of makes sense, right? Okay, all of us in this room are self-employed. Which of those 2 tax rates do you pay tax on in your business? The individual rates, most of you. Okay? So if you do well, you can invest in your business, hire new employees, all that good stuff, but you're still going to pay tax at 33%, while big businesses pay tax at 15%. Does that sound fair to anybody? Okay, this is extremely important. This is what we're promoting in D.C. Our number 1 advocacy project is those tax rates should be the same. Okay, if you're self-employed, you file a Schedule C just like you guys do. If the corporate tax rate is going to be 15%, the tax on your Schedule C income ought to be 15%. Okay? There are 99% of all businesses in this country. Think about this. 99% of all businesses in this country file a Schedule C. Vast majority. Why are we promoting business growth on only one small piece of the businesses? Okay, so here's your homework. Okay, I need you to let your congressmen and your senators know that you're a small business and you want to pay tax on your business at the same level as corporations. Okay, very easy to do this. Go to nase.org. That's our website. The top navigation bar, there's a little box there that says NASE in Action. Under that tab, it says Legislative Action Center. When you click on that, you'll get a little box for your zip code. Put your zip code in, and it'll tell you who your congressman is, the 2 senators, and we'll give you a little email box. Just click on the email box and type that in there. Okay, let them know that as a small business owner, we want a level playing field with corporations. Okay? I'm not liberal, I'm not conservative, I'm not leaning anywhere other than for us as small business owners. Okay, everybody promise me they'll do that? Very, very important. Last week, I had the opportunity to testify before the House Small Business Committee in D.C. about Obamacare and about how that can affect small business owners. Overall, the main concept was level playing field. Our insurance premium should be deductible, we should have health care reimbursement arrangements, and we should pay the same tax as big business. Okay? Very, very important. Anybody fall asleep yet? All right, okay. Now number two. Now I'm going to talk to you about, and particularly those of you who are new, this may sound silly to some of you, but if you get audited, anybody ever been audited by the IRS? Was it fun? No. Typically not fun, okay? Most audits, vast majority, end easily with no adjustment, vast majority. But even if you get that letter on Saturday morning that says Internal Revenue Service in the upper left, you know, they don't send out birthday cards, they don't send out holiday reminders, not going to be good news when you get that envelope. As a small business owner, the chances of anybody being audited, anybody have a guess about your chances of being audited are? 21%. 21% is a very high guess. Oh, 0.1. Okay, 0.1 is closer. There's about 150 million tax returns filed every year. They audit about 1.5 million. So overall, about 1% chance. Okay? If you attach a Schedule C to your tax return, and most of you have a Schedule C, just because you attach the Schedule C, your chances are 2%. Twice as much as the guy next door. If your Schedule C has $25,000 of gross income, that's all, just $25,000. How many deals is that? 6? One deal, that'd be good. One deal, that'd be nice, that'd be really good. Okay, just $25,000, your chances are 3%. 3 times as likely. If you have $100,000 or more, top line on your Schedule C, your chances of being audited are 4%. 4 times as much. Now, this is not statistically valid, but if it's 1 in 4 and you're in this business for 25 years, you will be audited. So the question is not when, or the question is not if, it's when. Okay? If and when you get audited, the first question you'll get, every time, 100%, the very first question you're going to get from the IRS agent. Anybody have a guess?
Cars. Prove it. Do you have proof?
Can I see your business bank statements? Same question 100% of the time. Okay? So this may sound silly, but if you don't have a separate bank account for your real estate business, when this meeting is over, go by your bank and open a separate bank account. And from today, never mix business and personal. All the money you make from real estate business goes into that account. All the money you spend comes out of that account, and never mix the two. When you walk into that audit and he asks that first question and you say, yes, you may, and you pull out your little blue folder with 12 monthly bank statements in it, I'm telling you, your audit is 75% over. Okay, the presumption, and this is a requirement, the presumption in the eyes of the IRS is that everything in that bank statement is business because it's your business bank statement. The IRS then has to find something in there that's not deductible. So they'll look for Nordstrom's or they'll look for Macy's. They have to find something that's not deductible. If, on the other hand, you get that question, can I see your business bank statements? You say, well, you know, I don't really have a separate bank account, but I brought my personal accounts, and I've highlighted in orange all my business receipts. I've highlighted in blue my meals and entertainment. I've got some notes in the margin. It's just messy, right? Nothing is less deductible. Nothing changes. But the presumption in the eyes of the IRS is that everything in those bank statements is personal. And now you have to prove everything that's business. Okay, this is a huge, huge difference. Now, hopefully you don't get audited very much, but if you do, you'll be glad you had that separate bank statement. So of all the talking and seminars I do, this is my #1 piece of advice for a new business owner. Open a separate bank account and then have a nice separation of church and state. Okay? Second question that you're going to get, if you have something on line 9, and somebody already said this, if you have something on line 9 of your Schedule C, that's business use of your car, okay? That's going to be your second question. Does anybody know what that question is? It's not, what kind of car did you drive? It's not, where did you, can I see your mileage log? Okay, they don't ask anything else, can I see your mileage log? Now, in determining the actual deduction, you can use an actual expense method, standard mileage rate. Either way, you have to have that mileage log. Now, in this area, in North Texas, as a real estate agent, where do you live? In your car, right? You drive, okay? You probably underestimate the number of miles that you drive for this business. Those of you who are relatively new, when's the last time since you started in this business did you drive somewhere that you weren't looking at the neighborhood, looking at listings, seeing signs? It's Christmas morning and you're going to your in-laws. You're still looking at that neighborhood. Okay, a vast majority, very high 90% of the miles you drive should be included for business. This is a place to be extremely aggressive with the IRS because they can't ask anything except for that mileage log. Okay, now without seeing any eyes, does anybody just go, I don't have one for last year? I want to ask you to raise your hand, but if you don't have a mileage log for last year, now's the time to recreate it, right? You have your list of customers, you have the deals you closed, you've got your calendar, you kept track of things. Go back, spend a Saturday, spend a couple of hours, get a blue pen, a black pen, a pencil, a red pencil. You know, don't write every entry in the same handwriting. You know, do some messy, spill some coffee on it, you know, drive over it in the car a couple of times. So now your log will be supporting any number that you put on your tax return. Okay? That will be the second question that you get. They're going to ask about that. And if you don't have that mileage log, end of discussion. If you do have that mileage log, end of discussion. Okay? Does that make sense? Yes, ma'am.
I went to another tax seminar and they told I use Now IQ to keep up my logs. But then the tax, which was the IRS guy, he told me that you shouldn't use an app because if you get audited, they will question you more that you should log it on a paper like you're saying. So is it better using like a notebook instead of an app?
Everybody hear that? It doesn't matter. Okay, now I firmly believe this, and you guys need to pick where this line is, okay? But there's an age line, right? If you're above that age line, you like to see paper. You like to see physical things. You like to see receipts. If you're below that age line, you like it electronic. You do the app, you do online, you do an Excel spreadsheet, you do a PDA, you have your iPhone app, right? The IRS agent's exactly the same way. Now this is kind of scary because you won't know, right? But when you walk into that IRS agent's office and the guy looks like me, pull out your log with the coffee spilt on it, the peppermint stuck to it. If you walk into that office and there's a 23-year-old in that office, pull out your PDA, okay? So as I answer the question, it's totally fine whatever you use as long as it supports your number, okay? I personally like the paper because it is virtually indisputable, right?
All because you have gray hair?
All because I have gray hair and I've got wrinkles and it's this wisdom, it's this look of wisdom that makes me look old. That's what it is.
But can't you just print your Mile IQ?
Yeah, you can.
You can certainly print your Mile IQ. It is, again, absolutely.
Spill some coffee on it.
Spill some coffee on it, absolutely. So again, the key, absolutely anything that you want to use works. Just also, the key point here from a tax savings idea, be aggressive in this area. This is a place to be aggressive, okay, because they can't check anything other than your mileage log.
We only have to do it for 3 months, right?
Everybody hear that? Okay, you only have to do it for 3 months. Now, back to the sales pitch of your audit, okay? Do you want to walk into the audit and say, this is my 3 months, or would you rather walk into the audit with the whole year? Now, overall concern, do not let yourself become an accountant, right? That's the last thing you want to be. Do not spend 17 hours a month doing your mileage log. If you've got extra time on Saturday, make some calls. That's the key to the success of your business. But find some way that is easy for you to keep track of as much data as you can. Okay? Does that make sense? Did I miss somebody else? Did I miss a question?
I have the same question.
Okay. Okay, so those are the 2 questions. Now I'm going to give you 3. This is my favorite part. I'm going to give you 3 tax savings tips. Okay, this may not apply to everyone, but you got to take advantage of these things. Okay, does anybody here live somewhere? Okay? If you live somewhere, you probably have a deduction called the home office deduction. Because everybody heard of the home office deduction. Even if you have a rented spot in a real estate office, you can still take a home office deduction if there are functions that can only be accomplished at the home office. And I always say, I do my accounting, my personal billing, my private records. I don't leave those at the office. I have those at my home office. You can even just store stuff in the home office. Okay? Now, has anybody heard home office deductions are red flag? Everybody heard that? Okay? So if that's true, I don't believe in red flags, okay? But if that is true, there is a brand new standard deduction for the home office. Okay, you don't have to do this giant form. You don't have to keep track of your utilities. You don't have to put on your real estate. You don't have to put on cleaning lady. You don't have to do any of that stuff that lends itself to being audited. Now all you have to do is figure out the square footage of your home office times $5, and that's your deduction. And it is unauditable. $5. So if you've got a 200 square foot office, $5, that's a $1,000 deduction. That's probably $300 or $350 in your pocket. It's enough to pay your accountant. Okay? Now the rules are the space has to be used regularly for business and exclusively for business. Okay, so find some back bedroom, someplace to call your office. Now we've already talked about my age, right? A couple people talked about my age. In my entire career, I have never, not once, heard of a situation that the IRS comes to somebody's house. They're not going to come to your house and look at that room. If they do, they don't just show up on Saturday morning. They make an appointment. Okay? When they make an appointment, take the baby bed out of the room, make the room into the home office. Okay? But this is money laying on the ground. Now, it's not PC these days to talk about profiling people. We're not supposed to profile one another, but the IRS profiles us, right? When they look at you, you put a little SIC code in the upper right-hand corner of your tax return, they already know that you're a real estate agent in North Texas. They expect you to drive a lot, and they expect you to have a home office. Okay? If you don't have a home office, it's more likely to raise a question in the IRS's eyes than if you do. Does that make sense? Yeah. Okay. Now, if you're a real estate agent in New York, in Manhattan, they expect you to have 0 mileage on your car because those people don't even have cars, right? In North Texas, we do. Yes, ma'am.
What's the average square foot people? 200?
Well, it's nice to have a room, whatever room. Now, 200 square foot is a pretty big room. You guys are the real estate experts.
12 by 12 is 144.
12 by 12 is 144. But the key is to find a spot that you can use regularly and exclusive for business. Okay, second idea. Am I running out of time? Second idea. Okay, this is my favorite one. Okay, so my first question is, how much do you give your kids each year in money? Answer's a lot, right? And I'm not just talking about allowance. I'm talking about clothes, band trips, choir trips, movies on Saturday. This is a big number, right? Okay, now first of all, do not go out and have kids for this idea. Okay, that you're not going to be ahead of the game. But if you have kids at home, rather than just give them money, create a job. Okay, do a job description, pay them $500 a month. You can actually set up an auto transfer from your business account into a kid's savings account, $500 a month. Do time cards. At the end of the year, you do a W-2, a W-3, just like a regular employee. You do an annual 944 payroll tax return. You just created a job for your child, and you paid them $6,000 a year. Okay? Now, this is money you're already giving them anyway, right? So this is not new money. And a child working for their parent in a sole proprietorship does not have to file a tax return at all until they make at least $6,500. The wages are not subject to FICA, not subject to Medicare, not subject to state unemployment, not subject to federal unemployment. The $6,000 is completely tax-free to the kid, but it's a $6,000 full deduction right on your Schedule C. So now, as you're doing your tax return, if all of a sudden you got finished with your tax return and you said, oh, I forgot a $6,000 deduction, would that help on your tax return? Now, most likely, depending on where you are tax bracket-wise, that's going to save you $2,500 in cash just for doing the paperwork per kid.
I was just going to ask the question. Is there an age limit on the job?
Anybody else had a question about age limit? Age limit? Excellent question. There is no age limit. Okay? It only needs to be reasonable. Now, in the concept of child labor, age limits, the Department of Labor, Texas Workforce Commission, federal housing, everybody has rules about you can't hire a kid unless they're 14. Anybody heard that? That's the child labor law. Okay, a child working for their parent in a sole proprietorship, all of that is exempt. And again, I hate using law and logic, but the idea is a parent's not going to subject their kid to working 18 hours a day. So none of those rules apply for a kid working in their parent's business. Okay, I'm telling you guys, of all the things we talk about, I've talked about this for 25 years. This is a no-brainer. Okay, this is unbelievably a no-brainer. Yes?
All right, so if your kid is off at college, can you employ them that way somehow? Like, you know, as a virtual assistant, yeah, virtual assistant or something like that. I mean, if it's reasonable, it's in their job.
Everybody hear that question? Okay, keep that in mind. We talk about age limit, okay? Now, there is no age limit as long as it's reasonable. Okay, if you're an architect and you hire your kid to help with, you know, a complex algebraic formula, taking the third derivative to figure the vibration of the building, and the kid's 3, probably unreasonable, right? But what if you're a photographer and your client is J.C. Penney and you're taking photos of the new fall line for 3-year-old kids' clothes? Not only is the 3-year-old reasonable for that job, only a 3-year-old can do that job. So in our business, what can a 6-year-old do or an 8-year-old do? What can they do? Clean the home office, for one thing. The social media, Facebook type thing, my 8-year-old, when my youngest was 8, was better at Facebook than me. There are millions of things that they can do. Okay, now back to the question of age limit and in college. As soon as the kid gets to be 18, now the wages are subject to FICA and Medicare. Okay, still a no-brainer. But instead of saving 40%, you're saving 25%. But now, every month, it's even easier to see the money you're giving your kid in college. Because when they go to college, you probably put cash in their bank account every month. The only thing you're not doing is the paperwork. Okay? I'm telling you guys, I've done this for 25 years. I have never had one single seminar, not one single person ever look at me and say, that's stupid. Because it is a no-brainer. But I know of not one that actually goes and does it. Why not?
The farmers all do it.
Farmers do it, absolutely. The reason people don't do it is they think it's great here, this is awesome, but when you leave the meeting, you get, okay, now what, did he say a W-2 or 940? Well, how do I do that? I don't remember. We've got a brand new benefit at the NASE that we're testing right now. We have 17 people that signed up for this year. And what we do at the NASE is we do everything. Okay, you pay the kid, we do everything else. We do the W-2, W-3, job description, payroll stubs, we report to the Texas Workforce Commission, new hire, all the paperwork, everything done. You pay the kid $500 a month, we do everything else. It costs $349, okay? You're gonna save $2,400. We have a guarantee that if you don't save at least $1,000, you get your money back. It's a no-brainer. I'm telling you guys, this is like, you can tell this myself, it's turning into my pet peeve. There's 27 million Schedule Cs filed every year. 27 million. I don't know how many of those people have kids between age 6 and 18, but every single one of them should be doing this.
So do you pay
Yes,
them
ma'am.
out of your separate account then?
Everybody hear that question? Yeah. Do you pay them out of, which account should you pay them out of? This is a business account. This is an employee. This is a regular job. This is a real job. Yes, ma'am.
Is it, but you said it was only if you're a sole proprietor though, so if you go to the trouble to like incorporate or whatever because you think that's helping somehow, then that doesn't work?
Did everybody hear that?
Yep.
Okay, now here's the trick. Okay, the reason this works, the reason this makes so much sense is you're taking $6,000 off of your tax return and putting it on the kid's tax return. Okay, that's the difference. Okay? Now, just like with the over 18-year-old, if you have a corporation, same thing works, except the wages are subject to FICA and Medicare. Okay? So it's still a home run, just not as good as if you were a self-employed sole proprietor because of the now the FICA Medicare is basically 15.3%. So if you're saving, you're still saving that same 15.3% on your tax return, but instead of saving 40%, you're really just saving 25. And I can't believe that comes out of my mouth, just 25%. Okay, so you're saving $1,500 cash even if you're a corporation. Now what if it's not your kid? What if it's a niece or a nephew or a grandkid or somebody else? Same thing, still works. You're moving money off your tax return onto somebody else's tax return that's in a much lower tax bracket. But those wages are subject to FICA and Medicare. Now the key is don't start doing this to some other kid just because you can save money. Don't ever spend money just to get a tax deduction. But if you're supporting that niece or nephew or a grandkid or you're mentoring a kid down the street, if you're giving money to a kid already, make it a formal job rather than just a gift, and the IRS will subsidize it. Now, whether you like Hillary or whether you like Trump, both of them talked about job creation. That's what this is. Did that answer your question? Does that make sense?
Yes.
Okay, so everybody who has a kid in this room between ages 6 and 18, please give me your card before you leave, and let's talk about this. Okay, I'm not trying to, this is my pet peeve, right? This is something you should do to save money. And your kid's gonna learn something about your business, right? And they probably already help anyway. Did I miss your question?
Well, you were saying that like a grandchild, you still have FICA and everything on that. What if you're actually supporting them, they live in your household? I know a lot of grandparents that actually have children living in their house. Does that change anything?
Yeah, it's still a direct parent-child relationship that makes it exempt from FICA and Medicare. Yeah, and you could have an adult child that's 45 years old. Oh my gosh, let's not even think about that, right? You can have an adult child that's 45 years old that doesn't earn any money. If you're supporting them anyway, the same concept still works because you're moving money off of your tax return onto another tax return at a presumably lower tax rate.
And they don't have to file a tax return if it's under $6,500.
That's correct.
So
And that's true for anybody. That's true for anybody.
you can move that money over to their bank account, and at the end of the year, do what you said, W-2, W-3, and you can use that money to pay their ballet lessons or something, right?
Absolutely. And remember, just because you pay them $6,000, they're still your kid. You're still a parent. That doesn't mean they get to spend the $6,000 on whatever they want to. You're still their parent, right? That's exactly right.
Doesn't care. They don't say, well, let us see the account. Where's the money?
Right.
They don't care. They don't ask.
Now, and this, I wasn't planning on saying this, but let me really blow your mind now. Okay, now that the kid has earnings, the kid has $6,000 of W-2 income, now the kid is eligible, Lindsay, to set up a Roth IRA because they have earnings. Okay, so now this is true cash flow. Now this actually, you lose some of the flexibility on the cash flow, but think about the concept. You're 6-year-old, you pay them $6,000 a year, open up a $5,500 Roth IRA. You do that just until they turn 18. That's 12 years, $5,500 a year. They got roughly 70 grand in the Roth IRA. All of the earnings on that Roth IRA are tax exempt, not tax deferred, tax exempt. Okay, now you can do the math if you want, but when your kid is at normal retirement age, they have got about $4 million in their Roth IRA just because you hired them from age 6 to 18. So that's our next idea, is to say, our little website is called hireyourkid.com, so you can go to NASE/hireyourkid. So our next little acronym is we're going to say hire your kid, retire your kid, by just doing that Roth IRA. And that is an unbelievable idea. Okay, speaking of retirement, this is my third third and last thing, and I know I'm over time, so I apologize.
I'm loving it. Keep
This is my third and final tax tip, okay? Before you file your tax return, if you use TurboTax before you hit send, if you use a CPA before you're done, make sure you look into potential retirement plan contributions. We have an expert here to talk about, okay? Now, what if I told you that the IRS has a matching program for your savings account? Anybody ever had a 401k plan where you put in 10% and the company matches it with 10%? They add, everybody, what if I told you the IRS has a plan like that? Would you believe me? No, you wouldn't believe me?
I believe you, but
Don't-
I'd be surprised.
Everybody's surprised? Okay, consider this. It's April 15th. You've done your tax return, you hired your kid, you did the home office deduction, everything you can think of to save money, and you owe $1,000. What do?
Write a check.
Take out a check, write Uncle Sam on it, and send it in, right? So instead of doing that this year, take that check that's Uncle Sam's money, right? Put it in a drawer. File an extension, and then do one extra deal. Find some way to save $2,000. Okay, as soon as you get that, and we don't all have $2,000 lying around, but take that $2,000, get the IRS's money out. That's $1,000, right? Put the two together. That's $3,000. Go down to State Farm, Charles Schwab, Merrill Lynch, whomever, and open a $3,000 SEP plan, Simplified Employee Pension Plan. It is a qualified deduction on last year's tax return. Okay, even if you do this all the way up to October 15th of 2017, you can still deduct the $3,000 on 2016's tax return. Now pull out your tax return, redo the calculation. That $3,000 is a full tax deduction. Depending on where your tax brackets are, it's going to wipe out the $1,000 that you owe. You no longer have to send the money to the IRS. So now you have a $3,000 SEP retirement plan in your name. You choose what it's invested in. It's your money for your future. And where did the $3,000 come from? $2,000 of your money and $1,000 of the IRS's money. The IRS will put in money into your retirement account just because you did. So that's kind of squinting a little bit. But why does this work? Why does this work?
It's tax deductible.
Does anybody believe that the Social Security system is going to take care of them in their retirement? Nobody believes that. Okay, in our lifetime, the Social Security system will change. It has to. The country cannot survive with the entitlement programs as they exist today. So the government knows that if you don't put money away for your own retirement, then you're not going to have a retirement. So they're putting their money where their mouth is. If you'll put money in your own retirement account, they'll subsidize it. Okay? Bottom line, before you file your tax return, make sure you ask your CPA, ask Lindsay, ask me, ask somebody, what can I do to reduce my taxes by making a contribution to my own retirement? Okay, this is huge. Socially, economically, reducing your taxes is a giant thing to do. Make sure you look into that before you hit send on your tax return. Yes, ma'am?
Is 3,000 the max?
3,000 is not the max. The maximum amount for most people for a traditional IRA is about $6,000. Okay, we have an age line again, you can do more if you're older, but basically $6,000. If you're a self-employed business owner, an SEP or Simplified Employee Pension Plan has a limit of 20% of the net earnings from your business, up to about $53,000. Now that'd be great if we all made $250,000 net income and we could all put $50,000 away for our retirement plan, but the limit is based on how much that you earn. That's one of the best things about the SEP is the limit is higher. Also, the SEP can be made as long as the extended due date of your return. So that gives you more time to save the money if you don't have it. A traditional IRA has to be deposited by April 15th, regardless of when you file your tax return. The SEP gives you that extra 6 months. So those are two benefits of the SEP over a traditional IRA. But regardless of which one you choose, find something that can give you a tax deduction and put away money for your future. Okay?
Do the thing again.
Well, thank you guys so much. I know I went over my 20 minutes, but thank you so much for the chance to be here.